Good morning, everybody, and thank you for joining this web conference. We are going to have a presentation by Magle Chemoswed in relation to the report for the first quarter of 2021. The company today will be represented by CEO Justin Pearce and CFO Petra Sjölin. And my name is Alf Riple. I work at Västra Hamnen Corporate Finance, and we have the honor of hosting this as we cover Magle Chemoswed with our commissioned research service. We're going to start today with a presentation by the company. Later on, we will have a Q&A. You can write your questions. There's a field on your right side of your screen if you're on a computer. I think it's on the lower end of your screen if you're on a mobile device. It says questions, or alternatively, it says a talk bubble. You expand that and you can write your questions. We will read them out and the company will answer. So the only thing remaining for me to say is that this session is being recorded, and the recording will later on be found on the Västra Hamnen Corporate Finance YouTube channel and on the company's homepage. So with that, I would like to leave the floor to you, Justin and Petra.
Super, thanks Alf, and thanks for hosting it again. We look forward to doing this quite a lot in the future. I think my screen just disappeared.
It's fine now.
You got it? Good.
Yep.
So the quarter one for 2021, from a general statement perspective, it was as we expected, and I think a lot of people in the industry expected, to be a very challenging start to the year with the after effects of COVID and the ongoing effects of COVID as well. But I think we performed very much towards expectation, and we ended the quarter in a good way. So the overall performance of the quarter was very much in line with our budget and our forecast. And we certainly during the quarter also managed to really focus on making substantial progress into the development pipeline as it relates to our technology platform. So this has picked up momentum again that we saw a little bit of a slowdown in Q4 last year. So this was very much on the positive side. And then we're also very happy that we've managed to close out the deal with Pharmacept in Germany, and we expect to bring them into the fold towards the end of the month and beginning of June, so that we will be able to start pushing our new products through them as well. So all in all, I think the quarter met the expectations that we had. It was a solid quarter for us, and we also managed to move forward with some of our strategic objectives. And this goes hand in hand with the very focus that we have for the year on really creating significant value for shareholders across the year. Just a word on the COVID-19 situation. We definitely felt an effect of the pandemic. There's no doubt about that. It certainly had a slowdown effect on our sales when it comes to the active pharmaceutical side of the business. A number of regions have continued to experience very difficult conditions in their supply and demand, and this also makes it difficult for them to access the hospitals and the patient populations that they service. So there has been an effect on that. It's an effect that we had anticipated and we had expected in the quarter, so there's nothing to report from an adverse effect perspective. And we continue to remain purely operational through COVID in Q1. So the business has been largely unaffected from an operational perspective in being able to service the projects that we have with customers and pushing the material out that we do have orders for. In terms of the remainder of 2021, we of course keeping a very close eye on the COVID situation and what that means for especially the API sector. But for now, we expect it to be fairly stable and in line with our predictions and forecasts for the remainder of the year. In terms of the financial summary for the quarter, EBITDA came in at 3.5 million. So there's an uptick in that from 2.8 million in the same period last year. And overall, the operating profit has come up even though we had a decline in the net sales between the two periods. We have managed to generate the efficiencies and the cost savings that we've been planning for to at least bump the operating profit as a result of that. Like I said, the net sales were down from 38.7 million down to 30.4 million in the quarter. Much of this was expected and forecast into the business, and this is largely on the API manufacturing side. So this is the major part of the decline that we see there. But even with that decline, profit after tax was significantly higher than it was even with the higher turnover in 2020. And a lot of this has been the focus that we have currently on high profitable projects and highly profitable projects and products, and really pushing out those in terms of good service to the customer and selecting where we really invest in new projects coming into the business. The earnings per share, the only comment I have on that is there is a major difference between the two periods, and this is largely due to the fact that we had the second share issue and the share split in December and January last year and this year, respectively. We had a number of operational highlights through the period. We are experiencing very high demand on the CDMO service side of the business. This continues to really grow the services that we're offering to customers, and we have a number of projects within that part of the service side of the business now moving into the clinical supply demand in Q2, Q3, and early stages of Q4. So we would expect that to support some of the manufacturing losses that we're seeing on the API side. And then on a more exciting point, we have filed an application to the Swedish authorities under which we've requested an extension to our GMP quality license. So this is the license that allows us to handle pharmaceuticals, and we're stretching that license to be able to handle sterile final drug products. As you know, we built new clean room facilities last year, and we've invested quite heavily in that, and this is now the final inspections that we would hope to have within the next 3 months that'll allow us to offer sterile drug product handling in the facility. So on the CDMO side, we have a good push on the services, and we're certainly extending our reach into the types of companies that we can service with the manufacturing as well. On the development pipeline, we're moving forward strongly. As I said, we're accelerating the Envacept M and the Envacept L products. These two products we see as a very strategic fit into Pharmacept. They sit well within the portfolio that we have already with Platicept, which will be the new product coming in with the acquisition of Pharmacept, and also for the existing Envacept S product. So we're really looking to extend that and to really push these products into that portfolio now. The other thing I can say is our newly funded Eurostars project commences in Q2, and this really is incredibly exciting from a technology perspective because it's moving us more into the advanced therapeutic combination products. So now we're really looking at the biopharmaceutical market in respect of moving our technology platform to support that as a drug delivery for those sort of personalized medicines. So we're keeping a very strong eye on that, and we hope that collaboration will be a successful one because it moves us into very exciting areas in the future. A little bit of the pipeline, as I said, Envacept L continues. We're coming up towards the end of the design verification phase now, and then we'll move into validation and regulatory filing. Envacept M, which is for the treatment of benign prostatic hyperplasia. This is now moving into validation, and we're still on track to make the regulatory filings as we had forecasted, being in the later parts of 2021. And SmartGel 2, we're moving forward now. We're into the middle of the design and development phase. We see good results coming in, at least from the preliminary testing that we're doing. And we have a number of commercial discussions already in place over that product. So overall, the pipeline is moving well. I think the CDMO service side is moving strongly into new projects and into new areas, both on the sterile drug product side, but also for new customers coming into us. That'll drive that side of the business for the future. So overall, the quarter was a challenging quarter, without a doubt, but I think we outperformed where we wanted to be, and it remained a good, stable start to the year. and we look forward to maintaining that sort of momentum going forward. So this is a brief summary of what's happened in the last quarter from an operational perspective and from a financial highlight perspective. And for the more technical financial stuff, I will pass the floor over to Petra.
Thank you, Justin. Sorry for that. Moving over to the more financial performance and looking at the Q1 figures. So as Justin mentioned before, our net sales performance has been over our expectations, but also in line with the forecast that we have planned for the year. But looking at a comparison to last year, 2020, we were also down during that period of time. And I will get closer into the sales mix on the next slide. The other revenue I want to highlight that this contains of media that we're selling to our neighbor business, but also some sick compensation and other income from government facilities. Looking more at the material and consumables, which is in line with our expectations, we are continuing to perform a stress testing to evaluation of our inventory to show that we are in line with the expectations and with the valuation that we have made, and it continues to look good from our side. Within on other external expenses, we also have some forecasting related to the share issue that we were issuing on the 4th of January during this year, 2021. So there are some costs related to that within the operational expenses. The EBITDA at 12% is driven by a strong cost reduction. As Justin mentioned before, negotiations with suppliers, but also making sure that we have in line with our cost reduction plan that we have set off. Depreciation, we have new activations on CAPEX, capital expenses that we have activated during the period, which also increases the depreciation higher than 2020, slightly higher, let's put it like this. As you can see, we also have a decrease of personal expenses with almost 10% to previous period. If you can move over to the next slide, Justin. Thank you. So as I mentioned before, the sales mix, we have started on the top red graph, you can see Q1 for this year, and the bottom gray part is 2020's numbers. So just to give you a comparison, as you can see, the API revenue has decreased and slowed down to the COVID situation, and the change also of product focus. So it has decreased with 43%. But that was also in line with our expectation and our forecast that we had set off. The revenue mix, as we mentioned, as you can see, has been decentralized and across the portfolio and giving us a more stable revenue stream moving forward. CDMO services has increased with 5% to previous year, and we see an increase due to the higher demand, as Justin mentioned before. We also see some increases of our royalties, even though we had some negative currency effects. So this is a good moving forward. So please, next slide. This is a graph that I wanted to show in terms of the cash from operations and current liquidity, meaning cash in bank, and the changes in bank overdraft for the Q1 2019 and moving forward to the Q1 2021. This is more showing the current status need, and the status of liquidity for the period. So what will characterize probably the last column, which is the dark red one. This is the increase of the 20 million, which came from the share issue for the purchase of pharmaceuticals. This is the graph that sticks out mainly. We also have the cash from operations, which is in line with the expectation. It's and is on an average level during the reported period. Change in overdraft, which is the gray line, shows also our declining need for overdraft due to incoming payments that we have had during the period. This shows a broader way of how to see what is needed for the cash for the company and during the period for the cash and liquidity. I think that's the final page. If you have any further comments, Justin, please go ahead.
No, I think the underlying strength of the business, remains something that we're quite satisfied with. Looking at the cash and liquidity, you can see that it's improved vastly over the periods. And all in all, I think financially we're satisfied with where the quarter came in. Good, Alf. I think we're back to you.
All right, thanks very much, both of you. So I would just like to repeat from my introduction that you can write your questions either on your right side or your bottom of your screen. There's a field that says questions, or there's could be a talk bubble to indicate. You can write your questions there. We will read them out, and the company will answer. But just to kick things off, I want to get back to the acquisition of Pharmacept that you mentioned. I couldn't see any trace of Pharmacept in the balance sheet that you presented on Friday. So I expect that the consolidation of that business will happen in Q2. Is that correct?
Yep, that's right. The handover date for Pharmacept to join us is officially the 1st of June.
Okay.
So we would expect that to come in into the Q2 figures.
And you ended the Q1 with a lot of cash on your balance sheet, as Petra just showed. I would expect also that when you're going to pay for the acquisition of Pharmacept, that will take care of quite a chunk of that cash. Is that also correct?
Yeah, we expect there to be a cash effect of around 16 million SEK.
Okay.
In terms of balance. So yes, it'll have an effect, but it won't have a detrimental effect on that. And then, as with any acquisition, there's a working capital calculation involved in there as well.
All right.
So I don't expect it to go up, but it may come down by 200,000 to 400,000 SEK to adjust for the working capital.
Okay. But I mean, cash is not the only line on your balance sheet that will be affected. You will also get, I suspect, just both goodwill account and I guess both the immaterial and material assets on your balance sheet as well.
Yeah.
Could you estimate the size of each of those? Is that possible?
I think these are currently with the auditors in terms of stress testing on that. But on the goodwill side, we're looking probably between, I would say, 11 and 14 million SEK. On the immaterial rights, we're probably up to around 3.5 million in relation to that. Then there will also be an inventory effect on the established inventory that we take over into our group on that time. So all in all, I'd say there'd be a positive effect of a minimum of around 16 million.
Okay. And looking further ahead, after you have consolidated the business, it will also have effect on your income statement. So the one rationale, or the rationale you gave for this acquisition, that it will give you a possibility to expand on the value creation, and so I would expect that to feed down to your gross margin going forward. Would that be a reasonable expectation? And also, of course, the total sales.
Yes, we would expect additional revenues to come in on the top line from the sales of the products that they have existing, the Embocept S and the Platicept products. And the company is, as it currently stands, profitable. So we would expect that to be in line with our expectations between the 10 and 12% mark of revenue generated by Pharmacept over the period. So we should see a positive effect both on the top line and the bottom line.
And of course, there will be additional costs as well. I mean, other operating expenses like personnel and other. Can you give us any figure of what to expect there?
On the personnel side, we're expecting an increase of around 3 to 4% based on our current wage costs. In terms of operating expenses, the operating expenses there would probably have about a 1% effect. The place that we expect to see a slightly larger effect is a new line that we would need to add in, and this would be on the marketing and sales side. So we haven't previously been active in the marketing and sales of products. This would be an additional cost that we would take. Currently on the revenue basis received from the Pharmasep business, we would expect to have 15 to 17% return back onto that marketing and sales cost.
Okay, thanks. If we turn instead to your pipeline products, I'm thinking first of all of Smart Pan and Smart Gel that both were approved for marketing earlier this year. What are the remaining steps from here until you can start to make revenues on those? And how do you see the timeline for that?
Yeah, let's start with Smart Pan. Smart Pan is the more complicated one. This is because it is a first-in-class product. And where we are with Smart Pan at the moment is we're currently going through the reimbursement panels. So we've convened a number of panels with experts just to make sure that the positioning and the price point of that product is correct for the market. We expect that product to be entering, I would say, towards the end of Q2, beginning of Q3. And our launch plan there would be to have a soft launch into Heidelberg University Hospital, which is one of the leading pancreatic surgical institutes in Europe. And from that, we would then be looking to roll it out from there. So Smart Pan, in summary, I would say somewhere around Q3. And that's where we currently are. It's important that we take the time to get the right reimbursement codes on that. And as I say, first-in-class product makes it that little bit more complicated to make sure that we're getting the right sort of price point on it. In respect of Smart Gel, we're working this with our partner, Axo, and we expect to start production for Axo in end of June, beginning of July. And this will support a number of marketing studies. So we'd expect to start generating revenues from that around the same time.
Okay. And Axo, is that the distributor?
Axo, the distributor, yeah.
All right. Okay. Thanks. Turning now to your royalties, it came in a bit higher than I had expected, and as I understood, probably higher than you expected as well. It does oscillate quite a bit from quarter to quarter, and you have mentioned before that it has slowed down a little bit during COVID-19 because there have been fewer surgical procedures. Now, this is mainly sold in the US. The vaccination situation there is getting better and better. Do you see that already in the accruals of royalties, or do you expect to see that in near term?
I think we're already starting to see the positive impact of this. We saw that there was an uptake in material ordered in Q1 as they were preparing for the market to start returning to normal through the rest of the year. So in the previous quarters, we saw them running down a little bit on the inventory side. And here we can start seeing that they're starting to bulk up on the inventory again as the market in the US especially starts to open up again. So for the moment, I mean, we are happy with where we ended with Q1. Generally, I think the US market looks as though it's starting to open up again and become more accessible. We hope that this will have a positive impact on the royalty moving forward for the rest of the year. But I can't give you any sort of certainty or prediction on that. But yes, Q1 seems to indicate that the market is starting to restabilize and come back to life on the other side of the pond.
Okay. Turning now to your CDMO business and especially your services, development services, you had a very strong quarter in Q4, whereas the Q1 was more back to normal levels. Does that mean that you onboarded a lot of new development customers in Q4 that are now in the early stages of development, and because of that they will probably stay with you through many stages going forward? And if that is the case, does that mean that you are pretty much fully booked in the early stages of development and cannot take in a lot of more customers there, or do you expect these to move down the value chain and opening up more capacity in the early stage development?
Yeah. So the Q4 numbers were driven by sort of multiple points. We had a much higher demand in our solid state services than we were anticipating. So that was one good side of it, and these were sort of one-off customers in terms of those sort of services. So that was the bump effect that we had on the solid state side. On the more traditional sort of process development side, on the CDMO services, this was onboarding of 3 new customers into the business. Yes, we expect those to run through 21 at least. And then we also had one very large project which was coming into validation in that period. So we had a lot of work there for one customer in particular, and that would be a one-off cost as customers move into those sort of late stage developments. So we wouldn't necessarily see that replicated again in Q1. What we are seeing is a very high demand for services. Like I said, we have a significant number of new offers on the table for the late part of Q1 and early part of 22. So we are balancing the capacities to make sure that we have the services full up as we go forward. In terms of where we are in capacity, this is, I would say we still have capacity to take on 1 or 2 more projects, and we have a number of projects that we're looking at taking on. So there's still some room for growth in the service side, but we are also very happy with the way it's performing at the moment.
I noticed that. Sorry.
I was just going to say the current projects that we onboarded in Q4, we've done a lot of work with them over Q1, and 2 of those projects are now moving and sliding more into the clinical production side. So as projects progress into the clinical production side, then obviously we are able to onboard some more earlier projects into the service side.
I noticed last year there was a lot of talk, especially last year, there was a lot of talk about clinical trials being parked or delayed because of COVID-19, because you couldn't get test people into clinics and stuff. Is that already returning, or do you expect that further out?
I think for the smaller companies, it becomes a lot more difficult to find the space to conduct your clinical trial. So we are seeing, at least in a few of our development projects, that customers are focusing a little bit more on the process development side as their clinical trials are pushed out a little bit. But we're seeing people starting to plan for them, but not on the same timeline that we were discussing a year ago with them.
Okay. On your manufacturing side, I expect basically they are responsible for your cost of goods, and there was a huge drop in cost of goods this quarter compared to the same quarter last year. It's you have recorded less than a third as high costs on that line than you did last year. Same time, manufacturing income is down by something like 43%. So it's not only a volume effect. You mentioned that you managed to renew your agreements and to negotiate better. Is that responsible for the remainder? And if so, do you expect that to be a lingering effect, or is it just an opportunity in the market now during COVID?
Yeah, I think this is there are 3 predominant reasons for this. One is the renegotiations that we've done with a number of our suppliers, and we've been squeezing them as hard as we can to make sure that we get the best service without compromising the quality at the right price. So that's one leg of it. The other leg of this is just purely focusing on the sort of lean manufacturing principles, reevaluating all our working processes and our manufacturing processes to make sure that we're getting optimal efficiency out of that. So that's the second side. And the third side is that we, as Petra pointed out, we have a costing model which allows us to be far more accurate in relation to the inventory costing and the cost of goods, so that we're actually being able to do this almost in a live situation at the moment. So I think the combination of the three is what's leading to the expected reduction.
Okay, thanks. I just want to remind you once again that you can ask questions, write your questions, and we will read them out. There's still time for one or two. From my side, I have only one question left. You have a very strong balance sheet. Most credit metrics put you in a very strong position, whether you look at debt to total assets or debt to EBITDA, you're a very strong position. You have made some acquisitions quite recently. Would you be interested in looking at more acquisitions going forward?
If I told you, I'd have to kill you, Alf. I mean,
don't.
I mean, of course, we're always on the lookout for opportunities that strengthen the business. That's not necessarily by acquisition. That's also by investment. But if the right opportunity comes along and we see that there is a real value added into the business, then of course these are the sorts of decisions that we, proposals that we take up to the board and look at whether those decisions make sense. So in short, yes, we're constantly looking for opportunity. There's nothing immediate on the acquisition front that I could point to right now.
And of course, your development portfolio is also draining some of the cash that your other running business is producing. Okay. I don't think I have any more questions. I can't see any more from the audience. Do you want to make any closing remarks?
I would just like to say that I think the company's performed very well in Q1. We have a hugely dedicated and motivated team down here, and I'd just like to say thank you to them and thank you for the shareholders for staying with us, and we continue to try and strive to build the value and create a company that's sustainable and generates good investment.
Great. Well, thank you, Justin. Thank you, Petra, for doing this, and thank you to the audience for listening and participating. Thank you.
Super. Thanks.
Thank you.